Mark Grant joins us right now from Southwest Securities. He's been our resident expert on this, and most of his calls have been right on the money so far. So, Mark, what do you think? I mean, I was talking to somebody earlier and asking if this is even a solvable situation at this point. When you look over there, do you see any chance for optimism at all?
No, I see absolutely no chance for optimism at all. I think that it's not just a systemic problem in Europe, it's the system itself. It's even worse than that. The European Union wasn't put together correctly. They didn't have a Jefferson or a Madison or a Washington. The way it's put together just isn't going to hold through these tough economic times. Plus you have countries such as Greece that are in so far over their head that are bankrupt times two, and then not telling the truth about what they're doing. There's virtually no way out of this.
So let's start with Greece. It seems as good a point as any. I think their two-year debt is yielding more than 50% right now, 53.2%. How long is that sustainable? I mean, how long is Greece part of the EU? Is the only solution that they're out?
Well, you have a couple of big issues coming up. One, the IMF got very unhappy with Greece because they're not implementing what they promised. In other words, the Greek government keeps telling everybody that they're going to do this and that and cut back on this and sell off state assets, and they don't. They just are not telling the truth. Then you have Finland demanding collateral because they demanded collateral. Then you have Slovakia, Slovenia, and Austria demanding collateral. Then you've got another problem with Greece being just out of money. And so today the Greek government said, well, if you want collateral, we'll be happy to give you collateral, but you have to give us more money, which to me is just saying without any question at all, we're out of money again, we need more money again, and who's going to give it to us? And they just keep playing a very unpleasant game with this.
But, Mark, what's the end game for Greece, and when does it come? Because one-year notes, they're yielding 85%, I think. If I buy those, am I in the money? Do I have time?
You'll be in the money for about 3.5 days, probably. The end game for Greece is when Germany and some of the other countries say that's enough, or when Finland says we have to have collateral because they will be forced from power if they don't get collateral, and then the game is going to have to stop. I think they've kicked the can down the road. They have run out of road, and we're very close to the end.
We managed to obtain some remarks given by Federal Reserve Chairman BERNANKE, and these were July letters to Senators Coburn and Senator Corker. And in these letters, he said he saw manageable Europe debt exposure by U.S. firms. He also said that the crisis could affect firms outside of Europe. And once again, this is breaking news. We're waiting for more details on this, but these were letters that were obtained by Bloomberg back in July, addressed to Senators Coburn and Corker. Mark, I'm sorry to break in there with that news, but I didn't want it to stop you. But let me ask you, what's your impression of that, just the headline there?
Well, I think Chairman Bernanke is correct. It's going to have a big effect on America and a big effect on the rest of the world. The bond market, if you look at it, is telling you one thing. It's pricing in default. Every day, the banks in Europe widen out against the sovereign debt. And the equity market, which I've seen in my 38 years on Wall Street, is meandering along at its own pace. But all of a sudden, I think equities are going to wake up and they're going to be down substantially from where they are now.
Yeah, Mark, you and I were talking, kind of joking around during the break. I said I want to buy one-year notes out of Greece. I was definitely kidding. You said you'd be better off in SPXU, which is the ProShares Ultra Pro Short S&P 500. Not sure how serious you were about that, but if U.S. banks' exposure to Europe is manageable, then you wouldn't definitely want to short the S&P at this time, would you? I mean, I'm guessing you don't think it's manageable, right?
Well, it depends what you mean by manageable. All the big international banks are so tied. We're already seeing signs in Europe with the Eurobar rate, which is their LIBOR rate, of the interbank lending getting locked up. We're seeing huge amounts of money put by the European banks at the ECB. These are all signs we saw right before the Lehman collapse. The problem with the difference between the two scenarios is that Lehman was a systemic problem that was fixed by the government, was fixed by the Fed. And here in Europe, we have a problem where it's the system itself that's broken. And I don't know what happens when it goes down. And I don't think anybody else on the planet does either.
What do you think, by the way, when I initially saw these headlines, the words Bernanke, Europe, and debt exposure all in one place, it brought the conspiracy theorist in me to this world thinking, you know, I've heard so much this weekend about, hey, what if the Fed goes and buys European debt? That way they can sort of hold up the European banks. They can hold down the U.S. dollar. They kind of kill two birds with stone, like a weird European QE3. Have you heard anything about that?
I mean, you've heard some speculation about it, but it would be a political nightmare for this country, and I would place the odds on something like that occurring about 0.001% out of 100.
Mark,
so you're saying there's a chance?
Well, if you want to call that a chance, be my guest.
So, Mark, at this stage, given your outlook for the world, and it's not particularly bullish, but where do you put your money? Would you just keep it in Treasuries?
Yeah, I think the only place to have money right now is in the United States and in two things, either in Treasuries or good quality senior corporate debt to get a little extra yield. I would not be in equities. I would not be in preferreds. I would not be in subordinated debt. I'd be at the top of the capital structure, which is exactly where you had to be to survive the Lehman crisis, and it's going to be where you're going to have to be to survive this crisis.
Hey, Mark, we appreciate you spending some time with us here. Mark Grant from Southwest Securities there.